Hi there, this is Alvin from Dr. Wealth. I've been doing a lot more videos nowadays, and sometimes I scroll through the comments, and it has certain interesting ones such as this. Someone left a comment and said that he sounds like the guy from Emotional Damage. So I don't know who this guy is about, what is this emotional damage? And when I do a search and I find this Stephen He, and he is having that meme called Emotional Damage. It's been quite viral on the internet, and he has like 5.79 million subscribers. I hope I have like half of his kind of subscribers. So that was quite interesting, and I thought that since people think that I sounded like him, why not I try to be like him, and you for yourself judge whether it is close to what Stephen He is. And I'm gonna of course relate it to the stock market, right? So ready, and let's go. Now is the bear market, and there are many stocks that go down a lot. So I want to talk about emotional damage that can happen to you. Emotional damage number 1. It happens when you buy stocks at a high price and you didn't sell, and only to see the share price go down. It's a very terrible feeling, really emotional damage. And I want to give you one example. So the example here is ARK. Okay, it is a very famous ETF because Katie Woods was very good fund manager. In the 2020, the share price just rallied 300%. And if you never buy into this and you see your friends get rich, you'll be feeling like a failure. So you buy, you see the share price go up another 14%. But you never sell. You will hold until today, you will lose 72%. That is emotional damage. This is very common, so please be careful during the next bull run. Don't buy near the top. Next is emotional damage number 2. This happens when you bought the stocks early and you enjoyed the very big profit. You didn't sell, and only to hold the stock until it went below your buy price. This is also a very big emotional damage. I give you an example. Meta. Everybody use Facebook. Right? Meta is the parent company of Facebook, and if you bought it 5 years ago, you would have been enjoying 100% return as of last year, but you didn't sell, and after that you see the share price go down below your buy price. This is also a very big emotional damage. Holding the stock 5 years and you lose money, how can that be acceptable? Right? It looks like a failure. This is emotional damage number 3. You hear people say share price come down is a good thing because you can buy them at a cheaper price. But every time the share price dip, you buy, and it only go even lower and lower and lower, and you keep buying and buying until you don't have money. I give you another example as well. This is Alibaba. You should be very familiar with this company called Alibaba, which is one of the largest company in China. After the share price dropped 30%, you thought that it was cheap, so you buy. And what happened? It dipped even lower. You buy one more time, it dropped another 24%, and dropped another 20, another 10. So the dip goes deeper. You have a lot of emotional damage. This is emotional damage number 4. This happens when you want to short the market because you think the market is very bearish. Everything is going down. So might as well you make money by shorting the stocks, but only to find the stock go up opposite to your direction. This example would be MicroStrategy. You might not be familiar with these companies. They went to buy a lot of Bitcoin, and Bitcoin price have crashed. So you thought that the company is in trouble. Right, billions of dollars of Bitcoin they lost, and you short it, only to see the share price go up 145%. And that is emotional damage because you lost more than what you put in. Shorting is not so simple. Emotional damage number 5. This is when you cannot take the damage anymore. The emotional damage is so big. You hold on to the losses so much, you cannot take it anymore. So you decided to sell the stocks to make yourself feel better. And after you sell the stock go up without you. It's emotional damage. This example is ExxonMobil. You should know this company. It's a very big oil company. 2 years ago, during COVID, the oil price went below $0. Can you imagine? There is never in history a time where the oil price went below $0, and it happened. And if you are holding ExxonMobil stock, it's very highly likely you will sell it. And after you sell it, the share price rallied 172%. You would have made a very big gain out of this because the oil price recovered and there was inflation, so the share price went up. So in summary, stocks are dangerous, and that is why other people tell you it is risky. It can inflict a lot of emotional damage to you. So you must be able to withstand them in order for you to invest successfully. Remember to give me a thumbs up on this video and resubscribe to the channel. I will see you around.